It's Sunday evening, January 31st. I'm trying to set my week up, so I'm doing a little bit of research. I want to review our current positions. We've got a couple adjustments to make to our swing trades. Hello, traders. Let's also see if we can find a trade for Monday morning. You can see on the chart, we always start with the market. We had this upward sloping trend line. It was actually an upward sloping channel that was breached to the upside, usually signals a buying climax. We've been super cautious. If you've watched my last two videos, I showed you how we adjusted our positions. We're in great shape going into the new week. Things were a little bit dicey last week. I tried to squeeze in a couple of bullish put spreads, tried to get cute, almost paid the price for that. Fortunately, we were able to adjust. Please make sure to watch those videos. Lots of great educational content. You know that I've been telling you for weeks, go to cash if you're a swing trader. Right now, this is a low probability market to the upside. We've got smaller rewards and larger risks. We had margin lending at a all-time high on a dollar basis, bullish sentiment off the charts. We had stocks last week, short squeeze galore all over the place. Lots of warning signs. Plus, stocks are valued at a PE of 40, incredibly rich. Coronavirus continuing to spread, vaccines not getting out there fast enough, mutations. There's a $1.9 trillion stimulus bill that has yet to be passed, but it's probably going to get passed. So I think that this is a temporary pullback. Bullish speculators are going to get flushed out. Where might we possibly go? So let's take a very quick look at the S&P and we can review the warning signs. Monday, out of nowhere, 60-point S&P drop. Yowzer. Get a rally right back to the top. Bullish hammer. Okay, everything's looking all right. We tried to advance on Tuesday and the market closed on its low. Wednesday overnight, wham, that's when the big hurt came. Thursday, market tried to rally and fill in some of this gap, no go. Market sold off and we closed near the low of the day and below the halfway point of this long red candle. Bearish sign. Friday morning before the open, we adjust all of our positions. Actually, in here, we had bought some VXX calls that will help hedge our open bullish put spreads. Friday's price action was super weak. We broke the upward sloping trend line and we closed below the 50-day moving average. Not good. I'm looking at the futures right now. S&P futures are down about 25 points. I believe they've been down as much as 40 points. We're going to have a weak open Monday morning. So what do we do with that information? First of all, we've got to take a look at our current positions. This market breakdown tells me that we could see further selling. This is negative price action. I believe that we could come down to the start of this upward sloping channel. And I can draw the upper boundary here so that you can see the channel and you can see where we broke out. That's the upward part of the channel. There's your breakout. So typically, what will happen is that the market will try to retrace to where this channel started. That puts us right about there, and that takes us to about 350. But before we get to 350, we've got a horizontal support level from that top right there, and we have the 100-day moving average. Those come into play at about 355. I think we could move down to 355, maybe even 350 before the market finds support. We'll only know based on the price action just how far we'll fall. But for right now, I am fairly bearish. You can see how that has taken place on heavy volume. So let's take a look at our current positions and we'll make some adjustments there and we'll talk about what we've got open and what we need to do. So here are our positions. We have an Nvidia bullish put spread on. We're short the 497.50 puts. We're long the 495 puts. They expire Friday, February 5th. Netflix, we're short the 550s. We're long the 547.50s, 50-cent credit there. So what we're going to try and do, Netflix is kind of a lost cause right now just because the stock is trading below both strike prices. Last week, Thursday, Netflix actually did rally. So let's take a look at Netflix first because it's probably the one causing us the biggest headaches right now. You can see the gap up after earnings and the steady decline. And then last Wednesday when the market really got hammered, the stock sold off. But look, it's been able to hold the halfway point of this long red candle, and it actually showed some relative strength on Friday. That was encouraging to me. You can see this was a horizontal resistance level. Now it's horizontal support. Let's take a look at that 5-minute chart on Netflix. You can see the stock makes an early low during the day, but the market continued to drift lower all day. Netflix did not. It really held its own well. This is an overlay of the S&P 500. You can see new low of the day there for the S&P 500, not for Netflix. Another big new low for the S&P. Netflix barely takes out the low of the day. Market bounces, Netflix closes right in here. I think that's a strong showing. It's got good relative strength. So there's no need to panic on this. The stock moves like the wind. It's a $550 stock. It could easily rally above our short strike price. So no adjustment needed. Option implied volatilities are very high right now, so we don't have any assignment risk. If by chance we got assigned on our puts, then we would exercise the long put. So if you came in and your broker told you you've been assigned at 550, your long stock at 550, we simply exercise our 547 puts and we realize the maximum risk on the position, which is $1,000 for the model account. We did 5 contracts. That's our maximum risk on the position. Same is true for Nvidia. Let's take a look at that. They've got earnings coming up. Stock held up very, very well. In fact, when the market was going down on Friday, look what the stock did. It wanted to rally. So I see that as a very positive sign. Put up the D1 chart. You can see lots of horizontal support in here for it to lean on. I like it. I think Nvidia is actually going to be an okay trade for us. But just to err on the side of safety, and just in case we get lucky, we get another pop in Nvidia like we did on Friday with that big rally here. Look, the stock was up to 532 on Friday. We're going to put a bid out there and we're going to try and buy back our Nvidia bullish put spread. We have a weekend that has worked to our benefit because of time decay, and we are going to try and buy back that Nvidia bullish put spread. You can see that the order is already staged in the order entry screen. We're going to buy the Nvidia February 5, 497.50 put, sell the 495s. Let's do that for a 50-cent debit, good for the day. If we're able to buy that spread back for 50 cents, that's what we put it on for. We're going to scratch the trade. We'll break even on it. No problem with that at all. So that's one of the trades that you need to make sure that you enter for Monday morning. It's good for the day. We're going to be updating our positions day to day. I've also got another position here. You can see we're long the VXX March 19, $18 calls. We bought those not at $4.50, but we got filled at $3.85. You'll see here that I have an order to sell one of the VXX March 19, $18 calls at $7.35. How did you pick that price, Pete? In the model account, I have 6 contracts. If we're able to sell them for $7.35 on that trade, we will have made $3.50 per contract. Times 6 comes to $2,100. That would be our profit on that position if we are able to sell them. We need to have a big market drop for us to reach $7.35. But if it comes on the heels of an already big market drop the last 3 days, it could get there. So we're going to put it out there just for the day. Well, what's my thinking behind this trade? If I can make $2,100 on this, my maximum risk on Nvidia is $1,000. My maximum risk on Netflix is $1,000. That's $2,000 combined. With that $2,100 profit on VIX, I will have already covered my maximum potential loss. That's how we use hedges. So, and we could still have either or both of these spreads finish out of the money, so we make our money on VIX and we make our money on these spreads. That's what I'd like to try and do. So that's the game plan. There are 2 new trades in the staged order entry screen. One is to try and scratch the Nvidia bullish put spread, buy it back for 50 cents, good for the day Monday. The other is to try and sell the VXX March 19, $18 call for $7.35. Now we can go in and take a look at those calls. I believe they closed at about $5.05. In fact, yes, we can see where they closed right on the screen here. 475 bid, offered at 510. They would have to go up about $2.40 for us to have a shot at getting filled. Anything can happen in this market. Lots of bullish sentiment. If the bottom falls out tomorrow, you could really see that VXX spike. And I will be happy, no looking back, I'll be happy if we take that $2,100 profit. Perfectly fine with it. We were able to dodge a bullet. We had a couple of positions that were pretty dicey last week. We were able to exit them very nicely. So those are two potential fills for us. They would put us in an even better situation. Now let's see if we can find some trades. As I mentioned to you on the D1 chart, I do not like what I see in the S&P 500, but mind you, we are in a 11-year bull market rally. We are in a 9-month bull rally. Do I think that there's going to be a bloodbath out there long term? No, I don't. Not at this juncture, not with a $1.9 trillion stimulus bill that comes on the heels of a $900 billion stimulus bill that was approved in December. I don't see that happening. There's too much money sloshing around in the market for us to have a major decline. We do have some improvement on the coronavirus cases, so we aren't going to rebound like everyone is expecting in Q1. But by Q2, we could start to recover. I think that we're going to have just a normal correction down to this 100-day moving average. If we get down there, we are going to have some fantastic opportunities to sell some out-of-the-money bullish put spreads. So I am not going to come out tonight and tell you you need to gonzo start buying puts because we have the first technical breakdown in the SPY. All we've done is we've gotten through the 50-day moving average and the upward sloping trend line. Okay, that's nice, but that doesn't tell me that we're going to have a long-term correction. I would need to see further confirmation before I can get bearish on an intermediate term basis, bearish enough to suggest that you start going out and buying a bunch of puts. However, I am going to show you a bearish trade. We're going to take a look at it, and this would be for day traders. This would also be for very short-term swing traders who are looking for some bearish exposure and who have the ability to adjust the position if need be. I am not officially releasing this trade. It is not in the staged order entry. So for most swing traders, our tactic is going to be thank you. We're on the sidelines. We are in cash. We are going to be shopping. We are going to be stalking. We're going to be waiting for the market to come in. We're going to be waiting for that support to be established. And then wham, we are going to start nailing some really good bullish put spreads. If I really like what I see, who knows? Maybe we'll even buy a few longer term out of the money debit spreads. I've got to see how things shape up, but those are my thoughts. So let's put up the custom search screen here, and I'll show you the criteria that I use to find these stocks. First of all, I want to find a stock that has had relative weakness on a daily basis and a 4-hour basis. So I've marked both of those boxes. I also would like to see a stock that has HA continuation 2+. This means that the stock has a bearish technical pattern using the Heikin-Ashi plotting method, and we'll take a look at that. It's got more than 2 bars in a row with flat red tops. That suggests that the stock has some decent downward momentum. Market sold off hard on Friday. I would want to make sure that the stock closed below the prior day's low. I also want to make sure that the stock had heavy volume on Friday. Also want to make sure that we've got some decent option liquidity. I'd also like to make sure that I'm not tripping over an earnings announcement date. We still have a lot of earnings coming out this next week. I believe about a third of the S&P 500 has reported. So we don't want to be tripping over an earnings announcement, having to prematurely close down our position. When I ran this search, these are the stocks that came up. So we're going to take a look at these stocks right here. There's one in particular that I like. So we'll take a look at Dow. And let me click on that. And you can see it's on the 100-day moving average. Pretty steep drop already below that horizontal support. Yes, this is probably a pretty nice short, but you can see very choppy. Not of particular interest. I'm going to save KMI because that is one that I think sets up well for us. I'd mentioned to you in my video a couple of weeks ago, as soon as the big banks started to announce earnings, I had mentioned to you, I think the financial sector is one where you can find some good shorts. I think MS is a good short. You can see this is the prior resistance level. That should be support now. You can see how the stock rallied. This is a failed breakout because we are now below that breakout, also below the 50-day moving average. Yes, I think MS sets up well for a short, but it's not the one that I'm going to pick. Starbucks. You can see how Starbucks broke this horizontal support level right in here below the 50-day moving average. After earnings announcement last Tuesday after the close, has continued to see selling. 100-day moving average coming into play very, very closely here. It could find support there, so I don't like this short for that reason. Charles Schwab. You can see that that stock also has dropped since reporting earnings, another stock in the financial sector. There's a failed breakout also below that 50-day moving average. I think Schwab sets up well for a short. But look, this stock doesn't go anywhere. Tiny, tiny little bars, nothing very exciting. Yes, it could continue to drift lower. KMI is the one I want to focus on. What do? They do pipelines. Well, right now they're talking about stopping the Keystone Pipeline. I think that the energy sector is going to find a lot of pressure. Plus, we've got some technical support and resistance levels that we can lean on. First of all, you've got this upward sloping trend line right here. That has been breached to the downside. The 50-day moving average has been breached to the downside. We have the 200-day moving average that has been breached to the downside. We had a breakout here, another failed breakout. So we're going to click there. We'll drop a line across these tops right here, extend that, and then you'll be able to see the horizontal. This was the breakout. That should have been support. That support failed. So we've got a failure of support right here at about the $15 price level. We have an upward sloping trend line that's been violated. We have a breakdown below the 50-day moving average. We have a breakdown below the 200-day moving average. We have heavy volume in the course of the last 3 days. Plus, we have all the criteria that we selected in the custom search engine that tells us this stock is weak. Let's put up that HA plotting method so you can see those candles. And there you go. Flat red top, flat red top, flat red top. Everything looking pretty good. A lot of downside momentum. How do we play this move? We go into our option pricing. I'm going to go to the February 19th expiration date, and I'm going to be specifically looking at that $15 strike price because that is where the stock had prior resistance, and that's where it should have had support right now. So what we would be looking to do is to sell a bearish out of the money call spread. We would be selling the $15 calls, and we would be buying the $15.50 calls. Because there's 50 cents between the strike prices, we would be looking to get a dime credit for this trade. So let's review that trade. Expiration date, February 19th, stock symbol KMI. We're selling the February 19th $15 call. We're buying the $15.50 call. We're doing that for a 10-cent credit. Let's take a look at that chart one more time. You can see there's your resistance level. Do I feel after this type of selling below all the major support levels with relative weakness on heavy volume that the stock is going to get back above this resistance level? I do not, especially not with a political backdrop that won't be favorable for energy stocks. I think this one could be in trouble for a bit. We're not taking any big risks. We're going out of the money and we're selling the 15.50 bearish call spread for a dime credit. That's a trade you should consider. It's not going to be an official trade. Why not? Because I still don't have enough confirmation from the market to tell me that it is in a short-term correction. I don't want to get cute with my swing trades. My tactic is not to get cute with shorts. I don't want to have a stimulus bill approved and have the market fly right back in my face. So I am going to keep my shorts pretty much to day trades. Other swing traders, we are going to be waiting for that pullback. We're going to be waiting for support, and then we are going to start nailing some really good bullish put spreads. I hope that we challenge that 100-day moving average, because that would be a fantastic entry point for us, and option implied volatilities would spike. That would give us a nice profit on our VXX position, and it would allow us to sell farther out of the money bullish put spreads so that we can provide ourselves with a nice, safe cushion. That's all I've got for you tonight, Sunday night. I hope all of you on your longer term swing trades have reduced your risk. I've been asking you and telling you to do that and go to the sidelines for the last few weeks. So hopefully you've done that. Hopefully you've got a lot of dry powder ready to take on some new trades. If you like the content, please give it a thumbs up. Make sure to subscribe to the YouTube channel and turn on your notifications so that you never miss these videos. I always try to include some current trade ideas for you, and there's always lots of education as well. Thank you. Good night. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.